Are we in a bullish trend, bearish trend, consolidation? Because the tactics that you use will depend completely on what type of trend the market is in.
Welcome back to Master in 5. Today is going to be fun because I have Kunal from Bulls on Wall Street here with me. He's been trading for over 14 years and he is a treasure trove of information. So with that being said, Kunal, thanks for being back here, brother.
My man.
Absolutely. So in 5 minutes, man, could you just explain the importance or just the idea of a morning routine?
Awesome. So traders, everything starts off at the foundation.
Yeah.
So if you have a bad morning, you're probably going to have a bad day. But what's happened in the last 5-6 years, because the market's been so hot, a lot of traders, they just wake up, they turn on their scanners, right? You got your trade ideas scanner, and right, you got all these people on Discord with their referral links, like get my Gapper scanner, and it's like, dude, there's no scanning for gapping. It's just how much a stock opens up pre-market, right? But a whole subset of people just turn on their gap scanners and then they're like, oh, these are the names I play. Well, that's not really how you look at a market holistically. And there's also periods and even years where gapper plays actually don't work. And so having a single-minded routine just doesn't do it. If you really want to be an elite trader, somebody that's banging it in and day out for years, because it's a grind.
Yes.
This is your job, right? So day in and day out for years, you got to have a proper morning routine, even beyond your trading. But in terms of the trading, when I'm in the morning, the first thing I want to do is look at the market in a macro way, right? So I want to look at the market indexes. So your QQQ, your IWM, that's your small caps, and then you want to look at the SPY, right? Right now, because oil is in play, you also want to look at the price of oil, right? Look at the chart for USO, that's the ETF for oil. You can look at the price of UNG, that's the ETF for natural gas. And so you want to start taking all this into play because there's correlations in the market. There are certain markets where if oil was flying, in 2007, when oil was flying, every time oil would tick up, the market would tank, right? And so all of a sudden, if you were just playing some gappers, you'd be like, why did I get rugged on this play? Why? Because at that time, when oil would tick up, every stock would sell off, beyond the oil stocks, right?
Yes.
So there's correlations into it. So you do want to dig into the macro way of what's happening in the market. But beyond that, it's going to tell you, okay, are we in a bullish trend, bearish trend, consolidation? Because the tactics that you use will depend completely on what type of trend the market is in.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
Right? If you are, for example, a long-only trader, or say you're trading small caps, right? And the NASDAQ and the IWM are in just straight crash mode like they were from January to basically April, well, guess what? Every single one of your gapper plays or news plays, they're going to pop up, you're going to see a pattern, they're going to get knifed. And you're going to do that over, and it's going to happen over and over. And it'll be the most frustrating year of all time, unless you're the one knifing them. But if you know what kind of phase the market is in and what's actually working in the market by looking at it in a holistic way, then you'll understand when to use what patterns and what not. After I look at the market indexes, I want to take a look at the big names. So I'll take a look at Apple, Microsoft, Amazon, Netflix, Tesla, right? These are the big American tech companies that really run our markets right now.
Okay.
There have been years like 2015 where the whole market was down, but those stocks were up, and so the market was actually hanging out near highs for like a good chunk of the year, right? So you need to know like what's holding up the market, like what's actually working. That's called market breadth, right? The percentages of stocks that are actually participating in the market. You need to know if we're in a narrow market, meaning there's 4 or 5 companies that are just flying and nothing else is, or are we in a broad-based run where a majority of stocks are going? If we're in a broad-based run, then now you can start to trade a lot of individual names, and you want to start really cyber sleuthing through some of those smaller names or unknown names. But other than that, sometimes you need to stick with the big ones. So you need to see like what's going on. Once I'm looking at those things, then I start looking at my gappers and news plays. And once I have an idea of where the market is and what my particular bias might be and where the trends are, now I'm going to start looking through. So for my gappers, I look at any gas stock that's gapping up 3% or more with over 50,000 shares in volume pre-market. Doesn't sound like crazy, but like a lot of large caps don't trade that much into pre-market if it's like more of an unknown stock. If you're trading small cap stocks, that thing better do at least 500,000 shares pre-market. Otherwise, you're just not going to have a lot of liquidity in it. And so I want to start going through these. So now I'm going through the gappers, and the news doesn't matter as much to me because my hold times are very short. But what we want to be doing is looking at the daily charts on these gappers to see where are the supply and demand levels and what actually has room to run, right? What actually has room to run. So a lot of times, like a stock will gap up into 11, it'll just get knifed down, right? Because it's running into a supply zone. So we want to see like what's in the clear. If your gapper doesn't have a pristine daily chart where it's clearing out levels, a base, breaking out the all-time highs, or coming out of a consolidation near lows, then those are usually not the ones to play. So you want to start separating through those. Beyond that, I got a list of go-to stocks, right? These are like a couple hundred names I've traded in the past year. It could be EV names, tech names, whatever, like oil names. But anything I've had success trading the last year, I have those on a specific list. I'll start farting through those things. Which ones are trending? Which ones have big ATR? That's your average true range. I need average true range to be able to knife in and out of these things, right? A lot of times people focus on the percentage gain, but ATR is nice because if you have like a $50 stock, but it's moving around $10, it's a lot easier to kind of sashay in and out of this thing than it is a $2 stock with, say, a 20-cent range, right? A $2 stock with 20-cent range, you're like kind of like, how do I get in, out, right? It just doesn't have enough range to get in and out. But a $50 stock with that much range, right? You can really move in and out and see the patterns a lot more clearly. Beyond that, then I'm going to start farting through and looking for like specific types of setups. So I'll start running scans on my TC2000. Hey, what are stocks that are breaking out? What are stocks that have momentum? You know, so on and so forth. So now I've got an in-depth scanning routine that's going to give me a lot of names. So like I watch usually 12 names. And I'll have a list of like even 10, 15 more. You know, and what I want to do is I focus in on my top 6, and then like on my top of the monitor, I keep, you know, another 6 that are like, it's a secondary eye. So now I've got like a broad-based thing. Because if you're just watching one stock all day, well, guess what? If that thing gets knifed, you're still going to keep trying to bounce it because it's the only thing that you have. When you only have one stock or 2 stocks and they're not doing crap, you will start to invent patterns and say like, I see something, I see something, right? So if you're looking at more stocks, then you can really wait for the perfect setup and get those things going. And that's going to be a huge help to kind of your routine.
Absolutely. Well, Kunal, thanks again, my man. I appreciate it. Master in 5, y'all take care.